I wouldn't be surprised if 23 kind of starts out really crappy, kind of bobs and weaves. We come back down maybe through this late summer into the fall. Things look like they're falling off a cliff, and then right into the end of the year, a surprising nice little counter trend rally pops up. That wouldn't surprise me at all. Anyway, so the point of all this is just, what should we be thinking in the market a la January barometer? And interestingly enough, I think there's a lot of correlation here. So US dollar index, if the market's not so happy, then we probably see, especially through the late summer and fall, we probably see the US dollar do really well. But then heading out of the fall and maybe into the early winter and into the end of the year, it looks like the US dollar is going to top out here. Bond market. Now, this surprised me, but I guess the point here is the bonds, they responded very positively to that jobs number. And like I said, I think it was interesting. Larry last night did sort of correlate an inflation sort of projection and the jobs, unemployment numbers down in the States, that kind of thing. And then it sort of suggested that maybe the push in the inflationary pressure will abate with all these interest rate increases, and so the jobs numbers should calm down. And that's, I guess, what you're seeing out of the bond market here. This should, if anything, help that yield curve inversion. The stronger that the long end of the curve is, the price is rising, the curve will flatten out. Maybe we'll talk about that a bit in the after video. As I said, there is the stock market's January barometer report. Interesting how basically we're now at unchanged for the year. I mean, it's been up and down like a horse drawers, but the end result is unchanged. Go figure. The gold market, all over the place. Was quite surprised to see the substantial rally here today in the gold price. We are higher than where we started out the year, so I think gold prices will sort of maintain their strong bid through 2023. And kind of like the study that we did on Newmont, I wouldn't be surprised if gold prices and gold stocks actually have a bit of a good time here for the next few years as we get over the COVID sickness sort of effects of the economy. More inflationary pressure. Crude prices, geez, just can't buy a friend here, but also interesting. Our whole thesis about gold prices moving higher, this actually works well in that thesis. Oil prices moving lower. Interesting how we do have a bit of a base forming here on the oil, so we'll watch that going forward. And then good old Bitcoin. Anyway, you can see Bitcoin did catch a bit of a bid here. You might also argue too, end of the first week. So this whole week's price action, what does this sort of tell us about the year to come? It looks like we're higher, actually kind of like the gold market. And I did hear people talking about how they figure that Bitcoin and gold, in fact, there was, I don't know whether that George Gammon guy is worth listening to from a sort of economic perspective basis. I mean, sure, interesting videos to listen to. But I think his big prediction is that gold and Bitcoin will finish the year higher. So go figure. Having said that, there should be quite a bit of back and forth the whole way along here.